All right. What's going on, everybody? Glad to see you guys here. So basically, like I said, I want to try something different today. One of the things that I do want to start off with is looking at the futures, and as you can see, the futures look bright, right? So we are nice and flat, but we got green across the board. So I like to always start off with just looking at what the futures have been doing since the futures market opened. And as you can see, at 8 o'clock right now, currently the Dow is up, the S&P 500 up, the Nasdaq is up, oil is up, and the U.S. 10-year Treasury bond is up. All right. So now, that being said, let me just kick it off. Let me give me about 15 minutes. I want to go over a few things with you. Uh, I want to go over like the most important economic data for U.S. stock market traders and investors, right? So this is very important because I know you guys see that CC or REMA, they usually post basically that economic calendar, right? So they will post that economic calendar, and I don't know if you guys read it, but it's very important to understand the macroeconomics in the market because when you're trading the market, you want to be able to say, hey, the market is going down because at 10 o'clock we had retail home sales data or something like that, or consumer sentiment, or we had GDP or inflation or unemployment or some type of data to move the market to the downside or to the upside. You want to be able to say that, hey, you know what, like CC would, CC the crypto queen would basically say, I ain't trading in the next 2 days because we got a lot of important data that's coming up, and I don't want to trade nothing that's a volatile market, right? So you would get that from her, but one of the things that I want to do go over is why economic data is important in stock market trading, right? Why is it important? Number one, economic data provides critical insight, right? Critical insight into the health of the economy. And that's important, right? You want to know, you want to be in a market. Most people want to be in a healthy market, right? Like I tell you guys, most people don't like trading puts and shorten the market because that puts you in. Number one, it puts you in that negative state, that negative psychology, right? So I don't. Most people, like even myself, do I trade puts? Yeah, absolutely. But then I have to be on the short side of the company, right? I have to say that, hey, listen, I know that this company is gonna do bad, so let me get in on puts. All right. So yes, we do make money off those, but majority of people or traders don't like, playing puts or shorting the market. All right. So economic data provides critical insight into the health of the economy, whether it's good or bad. All right, number two, traders use the data to anticipate market movements and make informed decisions. Right. So just like I was saying, like if some data come out, we'll just say we got some real estate agents here or real estate investors here. So if the housing market, the housing data come out, and you see that there's nobody buying houses, the inventory is up, the demand is down. So that data right there would basically make you say is, all right, is inventory up? Nobody does basically this, and nobody wants to buy it. Supply and demand, supply and demand. Hey, that data will make you move in a certain direction as a real estate agent. And those who trade the market, we buy REITs, right? We buy PSA. Y'all know about public storage, right? Y'all know about these different plays that like Home Depot and stuff like that. That basically impacts the market. So the data that we get, we can make informed decisions on that. All right. Now, last, understand these indicators can help traders predict volatility and price changes, right? So, like I said, if GDP comes out, if consumer sentiment, we can just go down the list of economic data. We play off that, right? So y'all been in the market a lot of times, or enough days. Y'all been in a market enough days for us to say at 2 o'clock when those Federal Reserve minutes come out, the market will be volatile, right? Or when Jerome Powell speaks, the market will be volatile. Or when something comes out at 10 a.m. sharp, the market will be volatile. All right. So you guys are playing earnings. We got earnings next week, right? A lot of people do play earnings, right? So that is some type of data. That's macroeconomics. Now, the one of the it's not the most important, but one of the um, economic data that I want to go over is GDP. Now, there are three main economic data that I want to go over, not tonight, but I just want to go over one tonight, and then we'll do another one the next day, and another the next one. Now, those three is GDP, inflation, and unemployment. So I know you guys like to hear the unemployment claims and the unemployment numbers and stuff like that. So we do like to play unemployment, and we do like to play inflation, right? So, but one of the things one of the economic data that I want to talk about tonight is that GDP and why it's important and how do we trade from it. All right. So now, first thing, do you guys know what GDP means? I know you hear it all the time. The GDP here, the GDP is this, the GDP is up, the GDP is down, the GDP, right? You guys heard about that. So the GDP is the gross domestic product, right? The gross domestic product. It is the total value of goods or all goods and services produced in the country in a specific period, usually a year or the quarter. So you do get quarterly GDPs and you do get that annual GDP. So you'll probably hear a term month over month, right? So basically all goods and services, right? Now GDP shows how big and how healthy a country's economy is performing, right? So all of the goods and the services, basically in our country. So the GDP just don't affect the United States. Sometimes we look at China, right? So you guys see that China actually just pumped up their economy, right? So their GDP was declining. So when you have a GDP that's declining, guess what you have to do? Same thing that we did in America during COVID. Hey, we're gonna have to lower them interest rates. We're gonna have to put some stimulus in here into this economy. We got to get these consumers spending again, right? All goods and services, total value of all goods and services. All right. Now, why do we care about GDP? So GDP tells us how good the economy is. We know that. That's number one. Number two, the GDP is growing the economy. If GDP is growing the economy and the economy is doing well, guess what? People have jobs. Businesses are thriving. Money is being made, right? So when we have a positive GDP, everybody's pockets fat, money in the bank, money in your savings. We going out spending, right? We doing up. We popping bottles in the club. Like, that's when you have a healthy economy. All right, number three, if GDP is shrinking, the economy might be in trouble. People might be losing jobs. Hence, all of the layoffs that's been happening, right? That can affect GDP, right? And businesses might close. Have businesses closed lately, right? We seen a lot of Dollar Generals, right? They stopped been declining. Have they been doing store closures? Party City has, right? It's been a lot. It's been a couple of companies that been closing, but it's been a lot of companies that's been building. For example, one of my favorite companies that we've been talking about probably every single week, if not every week, every month, Kava. Right, so Kava, they still building out stores. We went on their website just maybe 2 or 3 weeks ago, and we just wanted to see if they got new stores coming up. Yep, and they are still building stores. Right, so you got stores closing, you got stores building, but that is all a part of GDP. All right, now when you do get a GDP report, right? So hey, the GDP report's at 8:30 in the morning. Sometimes if you're not busy and 8:29 hits, go to the website that I'm gonna provide for you from the economic calendar or FinChat, or it's plenty of places that you can go. But one of the things that you can do at 8:29, as soon as 8:30 hit, those GDP numbers get released. And when they get released, hey, don't be afraid to know what they're talking about or know what's going on. And how do you do that? I'm about to show you, right? So we're gonna go over how to read the GDP reports, right? So now there's only two types of numbers: either they're good or bad. right? Either you got good numbers or bad numbers. All right, so now the good numbers, a GDP growth rate is 2 to 3% per year or per quarter, right? Because GDP numbers come out per year or per quarter. All right. So you have good GDP numbers if you see 2.5, anything in this range, anything between 2 and 3. So when you go to Forex Factory, so like for example, you'll come to Forex Factory, and if they have like right here some numbers forecast, um, so just pretend like this is GDP. So they would have, hey, you know what? We forecast 2.8. Do 2.8 falls in between 2 to 3%? Yes. So that means that's good GDP growth rate. That's a good GDP growth rate. All right. That's what we want to see. All right. We want to see something in between that range. All right. Now, this level of growth suggests a stable economy with job creations and rising business activity, right? It's in that range, that 2 to 3%. It ain't 5%. It's not 1%. It's in between that 2 to 3%. Right? That's important because we're gonna discuss that a little further. All right. So hold on, I got some feedback. Testing 1, 2, 3. All right. Now I'm gonna give you an example. Another example. If GDP grows by 2.5% in a quarter, it's a positive sign for economic stability. Is that true or false? Anybody can answer that. True or false? Feedback. Just make sure y'all awake. If the GDP grows by 2.5% in a quarter, it's a positive sign for economic stability. Now, is that true or false? Anybody? Tiffany, Jonas, Cece? Exactly, right? So that's true. So remember, because we are going to get those reports and we are going to play off this kind of data. It's like, so remember, I want you guys, so we going into a phase where macroeconomics is important, just as important, or fundamental analysis is just as important as the technical trading that we do, right? So it gives us an edge of how to predict things just a little bit better, right? Now, bad GDP numbers, a growth rate below 2% could indicate a weak economy. This might mean slowest business growth, fewer jobs, and reduced consumer spending, right? So that's important, right? Now, I'm going to go over consumer spending, but I do want you guys to understand, if people ain't spending money, that means, is your economy growing? No, right? So negative GDP growth for 2 consecutive quarters signals a recession. All right, this is important, right? A negative GDP growth for 2 consecutive quarters signals a recession. Now, do y'all remember a couple of years ago, right after COVID, or they made up a new rule for a recession? Because guess what we did have? We had 2 consecutive quarters of negative or of a negative GDP report, and they said, hey, it's almost like they just moved the goalposts, right? Did we bounce back from COVID? Absolutely, right? So the thing is, do you continue using the GDP reports? Absolutely, because it will tell us COVID was just a one-off, right? COVID was just a one-off, and guess what the Federal Reserve did? They did what they needed to do to get consumers back spending the check, right? So as y'all know, when everybody was on lockdown, the market was tanking, right? Everybody 401ks was tanking. People was upset. Right. So what the Federal Reserve did, Jerome Powell did, was, hey, we need to lower these interest rates because I need to get the consumers spending again. Now, I don't know if you guys got any PPP loans or government loans or EDIL grants or whatever they was giving away. I don't know if you got unemployment, right? They I don't know if they triple unemployment, right? Usually you would get like $200, but they was giving you like $700 or something like. So I don't know, $700 a week. It was something crazy like that.
Getting an extra 600 or 700 a week.
It's a $600 a week. That's what you said.
They giving an extra on top of what your state give. They gave like an extra $600 or $700 a week.
Okay. Oh man. So extra $700, $600 or $700 a week on top of the money that you was already getting. So the thing is, they was spending it, right? So Jerome Powell basically said, "Hey, I need to get you spending again. I need to lower these interest rates." Housing, the market came down. Hold on, the housing market didn't come down. The interest rates on the houses came down. The interest rates on cars came down. Money was actually going into your pocket from grants and student loans getting forgiven. All of this stuff. So that basically uh, made the growth rate in the GDP go from negative to positive, right? So that's why the market started to go back up again, right? Because of all of this stimulus that was coming out. Now, um, when we look in, okay, before we move on, example: if GDP shrinks by 1.5%, it may signal trouble in the economy and possible job losses. Is that true or false? If that GDP comes in at negative 1.5%, true or false? Does that signal economy and a possible job losses?
Yeah, that's true.
Yep, exactly, right. Because the thing is, like when that report comes out, like I told you guys, when CC, the crypto queen, she dropped this. When she dropped this every morning at 8:30, usually we get a report at 8:30. And if that GDP, if we're forecast a certain percent by analysts, and it comes in, what was that? I guess. And it comes in at 1.3. Guess what? 1.3 is below the GDP growth rate, right? And that's an indication of a weak economy. All right, so I want you guys to understand that. So when somebody is talking about the GDP and they talking about, yeah, the GDP, the numbers just came out, it was at 12%. You're gonna be like, you a lie. You a lie, right? Because that's well over the growth, the stable growth rate, right? If you at 12%, if the GDP numbers come out 12%, you well over that. What we need is in between the 2 and the 3% range, not 12%. 12% means that the economy is overinflated, and we're gonna go into that. Now, how do you calculate the GDP? All right, how do you calculate the GDP? All right, so the calculation is basically personal or consumer spending, right? I don't say personal, I say consumer spending, investment. So consumer spending plus investment plus government spending plus net export equals GDP. All right. So now consumer spending, you guys hear that a lot. Consumer spending, consumer spending. Don't get that confused with consumer sentiment, the economic data that get released called consumer sentiment. Now, so consumer spending is the goods and services people buy, such as groceries, clothes, cell phones, cell phone services, or just in general services like getting your taxes done and stuff like that, and healthcare, right? Not just healthcare and haircuts. You guys, you ladies that's on here that get your hair done, right? That all falls in consumer spending. And I said, don't get consumer spending confused with consumer sentiment, the other market data, because consumer sentiment is basically how people feel about the market, right? So when we get that consumer sentiment data, that's not a part of the GDP. So when we get that consumer sentiment data, that's basically a survey that is done to basically go around the people in America. I don't know if anybody been a part of that survey, but it's basically a survey that goes around that's getting done and is getting calculated on if people will spend money in the future. That's all it is. It's a feeling, right? Right. It's basically consumer sentiment is the confidence of people in America spending money in the future. That's all. Do you feel good about spending money in the future? No, I don't feel good about spending money in the future because I really do feel like I might lose my job. Why you might lose your job? Because a lot of companies doing layoffs. The tech sector end up busting. Prices has been going up. We can't afford it. So companies have to lay us off because if prices go up and nobody's buying that stuff, now they're gonna have to drop prices. That means I can't make my salary. So that means they have to do layoffs. Hence, that's what's been happening right now. Right, prices are up. A lot of companies has been doing layoffs. All right. So I don't want you guys to get confused with consumer sentiment and consumer spending, which is part of the GDP. All right. Now, the next thing is investing. So you got consumer spending plus investment. This is the business spending on fixed assets such as land, where my real estate agents at, and real estate investors, building, equipment. So all of those Bitcoin mining companies that's been going out buying stuff, so that falls in place of that GDP, right? Oh man, you buying Bitcoin mining facilities, you buying buildings, that falls up under the investment part. Now, I do want to go back to consumer spending. Now, consumer spending, I want you guys to understand this. Consumer spending makes up 70% of the economy. Right. So when that report comes out, and we're going to go to one of the reports so you guys can actually take a look at it. But it makes up 70% of it. Right. So your haircuts, your hair care, your cell phone services, your tax services, your lawyer services, clothing, groceries, all of that stuff, that makes up 70% of the calculation of the GDP. All right. Then you got your business spending. Then you got your government spending by federal, state, and local governments to provide goods and services such as school, getting roads and highways fixed, and then the military, the national defense, like the National Guard and stuff like that. So that you got your government spending from there. Last but not least, you have your net export, also known as export minus imports. Right. So the value of exports to other countries minus the value of imports into the United States. Now this is a little tricky. Because I'm gonna break this down for you guys. Now, as you can see, consumer spending, easy. Goods and services people buy. Investments, okay. Business buying buildings, land, and equipment. Okay, cool. Government spending. Okay, great. Highways getting built, schools. Basically government spending, that's easy. But then here comes the net export. All right, the value of exports. So we in the United States, we're talking about, and that's why things can get a little bit political with Democrats and Republicans, because Democrats love to bring in imports. Right? Donald Trump says, hey, I want all of the stuff to be built here so we can export. All right, do y'all understand? So we'll just talk about this administration loves to import. We talking about a lot of stuff, and I'll break it down. Okay, now how net export work? So I can, because I just looked at CC picture, and she probably sent me a message saying, Chris, stay on your agenda. All right. All right. So if a country's export more than import, right? So if the United States exports more than it import, it has a positive net export trade surplus, right? So if a country imports more than it export, it has a negative net export. So that means a trade deficit, right? So you probably hear that term a lot, trade deficit, a deficit, right? So now, do Chinese-made products get reported? Yes, Chinese-made products such as NVIDIA, right? So that's not a U.S. company, right? So all of these people that's buying these chips from overseas, TSM, right? That's a overseas. So in that case, if these are Chinese-made products, that's an import. All right. So now, does that get counted? Yes. So yes, do Chinese-made products included in the U.S. data? Yes, they are. When the U.S. buys products made in China, like electronics, clothing, or whatever you buy from China, Temu, Pinduoduo, those purchases count as imports to the GDP calculation. Now, in the net export calculation, if the U.S. imports more Chinese-made products than it exports to China, which is often the case, this contribute to a trade deficit. So that's one of the reasons why Donald Trump wants to, one of his policies that he has is that, hey, we want to be that's why one of the things that, about Bitcoin, he said that Bitcoin, he wants it to be U.S. made, right? I want so many Bitcoin mining facilities in the United States. That's why I say, hey guys, get some skin in the game with Bitcoin. Right? Because right now we are in a trade deficit with net exports, right? Because we do so much importing, we don't export. All right. So, let's just take a look at some of that data, right? So one of the websites that you can use is you can use the trading. You can use the website that CC puts out. You can use Trading Economics, or you can use BEA.gov, right? BEA.gov. That's where you can get it. But either one of those websites will give you those numbers exactly at 9:30. But if you want to go in details and get the whole little spread that I'm about to get ready to go over, just show you briefly, because I know this is not an economics class, and I know you want to get to some trading, right? So look at some stocks. But I do want to show you guys and the importance of macroeconomics and just three economic indicators that we use to trade the market, right? It's just an indication that we use, right? So I'm only going over one tonight, which is GDP, and we'll go over the other ones, like a little boot camp type style. All right, now what I want you guys to do is to go to the BEA website, and what you want to look for is go to data. Just click on data by data by topic. You already see GDP is right there. Boom. Gross domestic products. Boom. And remember, let's go back to the slide. What are we looking for? All right, hold on. Come on. All right. So, how do you understand GDP reports? How do you understand GDP report? Our job as traders, right, as investors, is to look for growth or decline rates, right? Plain and simple, right? Either you in or you either you high or you low, or you just perfect, right? Either you low, below, either you can be too high or you can just be right there, perfect GDP rate, right? And the perfect GDP rate we're looking for is between 2 and 3%. So 2.5, 2.9. We can even take a 3%, right? Oh, my audio went off. Hold on, let me turn it back up. So if you guys said something, I give you 5 seconds to say it again. If y'all need me to stop. 5, 4, 3, 2, 1. Okay, I continue. All right, so okay, fantastic. All right, so now what we're looking for, I just went to BEA.com. I don't know if you guys did the same thing on your computer. You clicked on data, right? You selected the GDP topic, right? Now we'll just say we're sitting here at 829. We hitting refresh. I'm not gonna lie to you guys. We literally be just like this. Refresh. Oh man, it's 8:30. Refresh. Where them numbers at? And then you literally see the market either go up or down with volatility in it, right? So that's I'm talking about with majority of all of the economic data, right? I swear to God, we literally be just like this. Refresh. Nope, it still ain't updated yet. Man, why y'all ain't updated? So usually 8:30 some seconds the data get released. 10 o'clock. Hit refresh, then the data get releases. So whenever you're looking for these, economic indicators, that's what we like to call it, economic indicators, you have to hit that refresh button, and usually they spot on time. It's not never 8:32, it's not 8:35, it's usually 8:30, and then depending on the seconds, you have, so, and then your streaming service. But anyways, so number we looking for, in between. If we want something good, we looking for in between that 2 and 3%. All right. So now that all right, the data get released. It's 8:30. Boom. All right. So guys, GDP reports came in at plus 3%. Is that too low? Is that too high? Or is that great? Does that fit in the growth suggest a stable economy? Does that fit in that stable economy, guys?
At 2%?
Yeah, the numbers came out for quarter 3 that just came out. So this was quarter 3 of 2024. I mean, the second quarter of 2024. So I forgot when these got released. But this is the latest data, right? Oh, these got released September 26th. The next release is October 30th. All right, so the next GDP release is October 30th. All right, but the thing is, when is October 30th? What's today's date? Today is the 20th. All right, so Wednesday. So on next Wednesday, we get some type of GDP report that comes out. All right. So, just to look at it on a bigger scale, because we did see some graphs right here. Let me just go back just to show you. All right, so here's the release, 3.3%. As we can see, 3% is good GDP numbers. This level of growth suggests a stable economy, right, with job creations and rising business activity. Now, if we sit back and think about this, do we see job creations? Right. I mean, I went on LinkedIn today and I seen a couple of people get some jobs. One of my friends or ex-friends, or I don't know what she is, but she got a job at the NBA. I see some people getting hired. Do you guys know some people that just recently got hired? If so, yeah. Yeah. So yeah. But on the flip side, I did see a lot of unemployment. Right. Unemployment just rose. Unemployment just rose. I did have a couple of people hit me up saying they just got laid off. I talked to my mentor. He said one of our old coworkers been off work for 9 months and can't find no job. So but I just came from church today and I saw up to $18 an hour. We immediately looking for an overnight shift manager at McDonald's. I ain't gonna lie to you. If I ain't had no job, I swear to God, I'd be that manager at McDonald's for the $18 an hour, right? All right. If I didn't have a job, but I trade the market, but I'm just talking about a regular person. If they not into the market, so is jobs hiring? Yeah, jobs are hiring. They said immediately. Right, they looking for a manager immediately. So the thing is, with job creation and rising business activity. Now, rising business activity, we got. So one of the things that we got to look for with rising business activity is, has people been buying stuff? Best Buy, we get earnings coming up with those. All of these earnings about to get ready to come up, that affects the GDP. Because you know what these companies are going to start saying? Let's look at some of these earnings that's coming up. We're going to go over earnings once I wrap up this class. But I just want to look at some earnings that's coming up that will affect GDP. All right. So some of the consumer stuff like Coca-Cola, right? I told you they got Coke Zero sells so well. They made a Coke Zero Oreo, right? It's nasty, but it sells so well. They made a Coke Zero Oreo, all right? Consumer spending, AT&T, remember cell phone services, right? How business been doing with them? I can't wait to see what these companies, report on their earnings. Will it be good? Will it be bad? But this is all of these companies that report ties into consumer spending, right? And the consumer spending, hold on, where's my thing? Consumer spending ties into 70%. Remember I said you 70%. It makes up 70% of the U.S. economy. So when we go attack these earnings, we have to keep GDP in mind. So when they get ready to report in October, we already have a game plan of when that data get released. Ah man, Coca-Cola, they beat sales. AT&T, they beat sales, right? All of the airline companies, they killed it. Now, one of the stocks that we are looking at is Tesla. right? Tesla been flat. We haven't got a pop or a drop. It's been literally trading sideways. Everybody can't wait to hear those numbers, right? UPS. I know CC outstanding. I know you're in that play, right? How we doing with those? And that's part of the service industry, right? So GDP is important for when we get those UPS numbers and they doing good, and Tesla is doing good, and Coca-Cola is doing good, and good guidance, and majority of the Texas Roadhouse right here doing good and selling stuff, right? Selling them steaks. T-Mobile here, guided up. Once we get those numbers, we can literally start predicting or analyzing GDP. Will it come in good? Will it come in bad? So that's how these analysts end up doing their forecast, right? So hold on, let me show you. So that's how I thought I had it up. I thought Forex Factory. So this is what CC ended up pulling out. You see how we got forecasts right here on the 1 year long prime rates for, I don't know where is that at, but the thing is, that's how we get our forecast, just by analyzing. And as you can see right here, you see that countdown clock. So you oh man, I like this. So the thing is, when data get released, they go to countdown clock already right there. So that's why I say we hit the refresh, and you can just open it up, and then you can get the numbers from here. Other than going to the BEA.gov, you can literally get it from here. But one of the things that every now and then, what I like to do when I go to BEA.gov, and I'm about to show you. Go to BEA.gov. Now you can literally look at the past 2 years, right? So here's 0, here's 2, here's 4, here's 6, here's the negatives. So as you can see, the GDP numbers has been positive, right? So we're about 2.5 here, 2.1 there, 4 points. So we was over 3. So we're in that 4 point range. So guess what? Something had to happen, right? So then the next quarter we end up coming back down to about 3.5, and then now we're working our way back down, and now we're flat at 3%, right? So that's 3%. That's good, right? So we end up getting that number down, getting that inflation down. How about that? We end up getting that inflation down. So that's why you probably hear people saying that, hey, inflation has been coming down. Inflation has been coming down. Nothing has been going up. Food prices has been going up. Inflation has been coming down. Right. So when Jerome Powell, his last speech, he said, hey, inflation has been coming down, but we can do better. Right. You heard that saying. You heard him say that. Right. Because because he's discussing the GDP. Right. Hey, inflation has been going down. Cool. Right. Now, one of the things that you can do is current releases. Right. So instead of just looking at 2 months, you can just look at over a few years. And as you can see right here, that's COVID. Everybody know what happened with COVID, and then we was only negative one time in quarter one. GDP was negative one time right here in 2022. All right, now let's go back. Last thing that you can do, if you're a nerd and you just want to know, I don't know if you guys like analytics, but sometimes I want to know just a little bit more information. Like I'm gonna just show you. I just want to see a little bit more information, but unfortunately, you do have to save it. All right, so save it, and then you just have to open it up. So it's an Excel file. All right, so what you want to do is just go to table 1. Boom. So you want to go to table 1. So here's the content. Table 1. It's going to show you real gross domestic and related measures, right? So remember I told you guys, if consumer sentiment or consumer spending is 70%, I just want to dive a little deeper into that and just take a peek, right? All right. So for example, our GDP, as I showed you guys, was 3%, right? So GDP came in at 3%, right? That's what we said. Quarter 2, 2024, 3%. Okay, cool. Chris, I get it. Now, what makes up this 3%? All right, so your consumer spending made up 2.8%. All right, your investments, remember we talked about investments? Where's my PowerPoint? All right, investments made up of a total, where's my total? Oh, they don't have it. Where's my total? All right, it should have given me my total. I don't know why it's not giving me my total. All right, but you see the government consumption, growth investment. I don't know why they didn't calculate my net export. All right, so here's net export. So remember how I told you how America exports, right? We don't export that much, but Donald Trump want us to export more. So let's just take a look at that net export. So remember how we talked about net export, how it works if a country export more than it imports. So look at what America did the last quarter and then quarter two. 1%, right? Export, 1%, right here. All right, goods, 0.9. We exported 0.9%. Services, 1.2. All right, services, 1.2. All right, what about imports? We imported a total of 7.6%. Right, this is importing from China, India, Mexico. Goods, these are the chips, right? Them chip makers. Yeah, I know y'all like playing TSM and NVIDIA. This is where that fall into. Services, 4.3. Right, Chinese services, like I don't know, like you know how like I worked for Intelsat before. They literally fire a lot of people that works at Ellenwood, like in Georgia, at the headquarters, and then they outsource what you call them telemarketers, call centers. That's India, right? So that's that services that they provide, right? So that's 4.3. And now remember what I said, right? You probably heard this a lot lately. Trade deficit, right? This is a trade deficit, right? Imports to exports, right? Imports to exports, right? So in the net export calculation, if the U.S. imports more Chinese-made products than its exports to China, this contribute as a trade deficit. So this is one of the reasons why Donald Trump is pro-USA, and he pro-USA manufacturer jobs, pro-USA jobs here in America, and he wants to tariff all of the countries. If we're going to become more U.S. built stuff or more U.S. made stuff here in America, and when we export it to other countries, this number won't sit at, what is this? Our goods won't sit at 0.9%, which is bad, right? Because we in a trade deficit as far as that GDP growth, right? I can work on other stuff. Remember I said consumer spending is worth 70% of the U.S. economy, right? That's a lot. So with a different regime in the presidency or the office, instead of working on getting the consumer spending down, I can now work on net exports. I can work on bringing these numbers up, these two numbers up, so it won't put me at a trade deficit in this category right here. Because in this category, we at a trade deficit. And remember what I said, anything that's over 2%, over 3% is bad business, right? That is bad business. Now, here's my last slide, and then we'll move on to stocks. Is the GDP a lagging indicator, right? Is it a lagging indicator? As you can see in this big highlighted in yellow, yes. The GDP is considered a lagging indicator when trying to trade the stock market. Because we can learn what the hell the GDP is all day. Hey, GDP, okay, anything over 2%, over 3%, that means that inflation is high. You know, we need to try to bring the spending down. All right, okay, cool. Yeah, we understand. Okay, I get it. I know it. But how does that affect me when I'm trading? Okay, it affects you because it's a lagging indicator. All right, now. Why is GDP a lagging indicator? And I'm going to go a little bit more in detail, but let me just read this off. Time of reporting. All right. Time of reporting. The GDP data is reported after the fact, right? Typically at the end of each quarter, it tells us how the economy performed during the period, but does not provide insight into what will happen next, right? I want you guys to understand that, right? It provides insight. It does not provide insight onto what happens next. So typically at the end of each quarter, it tells us how the economy performed during that period. All right, now we just spoke on this. Boom, earnings. Now here's a question for you guys. Oh, my volume is down. Hold on, I'm gonna give you 5 seconds. Can you, if you said something, take these 5 seconds to say it again. I'm sorry, my volume was off. Okay. All right. 5, 4, 3, 2, 1. Now, if GDP, right? If GDP is a lagging indicator, right? So, for example, what is a lagging indicator? Like your 200-day moving average, your candlesticks are lagging indicators, right? Because the price has already happened. Like when you're reading your candlesticks, and when the price go up, the candlestick reflect that price. Right, that's lagging, right? That's hindsight. You know how like you guys, I don't know, y'all old mentors or like your, I don't know, like if I go look at a chart right now and I be like, yeah, man, we should have got in right here. Yeah, shoulda, coulda, woulda, right? You know, all of that is hindsight. Yeah, let me show you how to trade this. But oh yeah, you should have did this. Blah blah. All of that is hindsight because you know what happened in the past. Right, so all of that past chart and stuff like that, that's a lagging indicator. That's lagging. Like, who cares? I want to show me what you can do now in going into the future. And this is what you have to understand with the GDP part of it, right? GDP is one of the most important economic indicators. Now, what we need to know is this, like I explained to you guys before. If consumer spending, which is part of the GDP that makes up 70%, right, of the U.S. economy, is this a question for anybody who want to answer? Is playing earnings and understanding earnings report, is that a lagging indicator, right? Is it a lagging indicator or is not a lagging indicator? No wrong answers. You know, we're just going to go over it. Anybody can answer.
Lagging.
Okay. You said lagging, no lagging? Somebody say lagging?
I think it's both because they also provide forward guidance.
Okay, I like that. So, earnings reports. Jonas, unfortunately, you're wrong. Who said that? Ken, you 50%, right? The reason, so good try, right? So this is what learning is all about. What like I told you guys, ABL, always be learning, right? So one of the things is that with earnings, one of the reasons why I tell you guys that earnings are 50-50 plays, right? Earnings 50, hey man, that's a gamble because we as traders don't know the report until they come out with it right there, right? So it's not a lagging indicator. Right? Because we don't know, they know. So that's why it's illegal for them to trade their stock off of earnings. They will get 10 years minimum probably if they trade earnings. Right? Because they already know. That's why earnings, like you work for Tesla, earnings reports, they don't get the earner data before, right? It's illegal for them to S&P 500 okay. Got distracted, my bad. So it's illegal for them to do that. Now, for guidance, is that a lagging indicator? No, right? That's not a lagging indicator because guess what? We are telling you what we foresee in the future. The GDP tells us what happened in the past. Hey, consumer spending was this. All right, consumer spending was this. Durable goods, we end up having 3%. Non-durable goods was at 5.5. Services was down. We was at 2.7. No, I'm sorry. Non-durable goods was at 1.7, which was down. So the thing is, gross profit 8%. So this breaks it down in details a little bit more. All right, just a little bit more. All right. Table 2 goes in a little bit more detail, right? What type of goods? Motor vehicle parts, furnishing, right? It just goes into details even more, right? To give you more data, right? Keep clicking on these tables, you get even more data. Clothing and footwear, right? You guys like playing Nike, right? So one person told me, I don't know who it was. Who the heck was it? You know, I ain't gonna say no names, but they said that oh yeah, I was at a birthday party this Saturday, and they was talking about how they got killed playing Nike call options, and I told him, man, hey, do you not listen to earnings or do any kind of like, do you know retail has been down, right? Like, why are you playing? Why? So basically, it was that kind of conversation, right? And in order for you to even know that, and that's why I tell you guys, hey man, listen, we're too talented to have continually to have losing trades. That's why I tell you guys, hey, if you have a losing trade, just DM me, right? We can put you in a trade to get you some green, right? To show you some profits. And that's because, number one, I'm always in the market. And number two, I want to get you guys into the market so you can not just do technical analysis, you can understand the macro part of it as well. And right now, we're just going to do GDP, right? Next week, we'll do, I do got a list. The next week, we'll do inflation or unemployment, because that's another one of the that's part of the 3 indicators that that we use as macroeconomics, right? But in order for you to get that chart, I think you guys saw how we got it. Go to bea.com. Unfortunately, it's an Excel. You can download it. Boom, tables only. Click on it. It'll take you there, and then you can just go through the tables and get your nerd on, right? Or get your study on, get your microeconomics on. Other than that, I think that's my last slide that I could read it, and then we'll go over it. Yeah, I'm not gonna go over other stuff. I know it's so much stuff, so many economic data, like the CPI, as you guys saw right there, inflation rate, CPI, PPI. I know you guys know that we trade that. Like I said, unemployment claims is another one. Inflation, you guys traded inflation before. With the Federal Reserve bringing interest rates up, bringing interest rates down, all that good stuff. So, but I do want to just let you guys know that, I do want to just start class off just going over something. Like I said, I want to just make sure that we always learn something new and always be learning. Even if you guys already know about GDP, I do thank you guys for staying on and listening to me ramble, right? Listen to me try to break some stuff down for you guys. All right, but other than that, hey, listen, that part of the trade, the class is over. Now I do want to just kick things off. Do you guys have any? Oh snap! China lower benchmark leading rates by 25 basis points. Do you guys have any? So that's breaking news. Just came on the wire. Do you guys have any questions about GDP? Trying to understand it. Okay, yeah, okay. So we'll just move on. All right, so like I said, unfortunately, I wanted to stream this on YouTube so you can always have a clip, but unfortunately, I would have to just download it. Maybe I can just upload it to YouTube. Oh, I can't upload it. Yeah, I just upload it to YouTube, and I just post that link. And you guys always have that link to go back to restudy GDP or, oh, Chris said something. I think he was wrong. And, hey, listen, fact check me. Listen, I love to be corrected. Right? If I said something wrong or got something wrong, I don't think I did. But, sometimes I can go on them little rants, and I can, y'all know how I am. All right, so now, futures, let's get busy, right? The futures market, as you can see, the future market still trading a little sideways, so that means we are up. We're not down. You don't see any red. So I've been rambling for a whole hour, and we're still up, right? So just reading some of the headlines from this weekend. election, hurricane damage, and more. Here are 4 factors that will shape holiday shopping. They already started. What's the date? October? What is the date? October 20? They already talking about holidays, right? What kind of rally we about to get ready to get? Do anybody know? Ooh, yep, that's Santa rally, baby. Hey, listen, I think tomorrow somebody needs to play Santa Baby or drop that YouTube video in the chat room, right? Because it's going to be beautiful, right? So now, have we got a Santa rally? Have we got a pre-Santa rally? And then the market didn't do nothing during that December, the first half of December? Yes, we have did it. I have been there in the market and was like, God dang, where the damn Santa rally at? And then it came after Christmas, right? So it was literally the Monday after Christmas. Then the market just took off, right? So it literally took off December 26th, going into January 6th, January 13th. Like the market was just going nuts. But we will get that holiday. You know what? They probably did that because they don't want to say Santa no more. I just thought about that. The holiday rally. How about that? All right. Elon Musk offers $1 million a day to entice swing state voters to sign petition. I don't care about that. All right, Trump works. I don't care about that. So I just wanted to go over some of the economic, some of the news headlines that can affect the trading going into next week. Anything with China, and I can go to Bloomberg and just see what's going on with China because the Chinese market is open right now. Luxury stocks may be at risk. Hold on. Luxury stocks may be a risky China stimulus bet. Luxury stocks. Okay, we should move on. How AI can benefit your influence making. All of this is stupid. All of these are dumb posters. Let's see. Okay, yeah, so that's it. All right, so we're done with GDP. All right, so earnings. Some of the earnings plays that we can start looking at going into next week. So all of you guys, if you did not sell out of your pre-earnings run-up, we can go over the chart. If you did the pre-earnings run-up, we can just look at some of these companies. Most of these companies have been uptrending, right? So you have made money on your pre-earnings run-up. Now, that being said, we can start looking at next week's, not this week's, next week's who have earnings reports coming up. Now, we have Apple that's on the list. We have Microsoft, so it's going to be a continuation of all of these good earnings, these big earners, right? So we got all of these earnings for this week. You guys should be up in these plays, other than a couple of like Tesla, because Tesla traded sideways. But Southwest, right? We know. Let me just pull up the chart so you guys can literally see it. All right, so LUV, Southwest. So since last Monday, do we have a uptrend? All right, so since last Monday, we'll go to last Monday. It was at $30. It got as high as $30. It got as high as $31. So that was profit there if you would have got into your play on that Monday. Now, are you still up right now if you bought Southwest Airlines? Yes, you are, right? And I just do another. I know, CC, you say you in Coca-Cola. I know you already up. Let's pick another one. Somebody pick one. We'll just do, I don't know. Let's do GE or Lockheed Martin. LMT, Lockheed Martin. This was Tuesday. This was Monday. 606, 611. I mean, you up a little bit on that one. And then what I said, Lockheed Martin. I said GE. GE, Monday. That's Tuesday. Monday. Oh, you'll be flat. All right, so you'll be flat, but you still was up if you would have traded that week. All right, so we can go over all of these, but it's just too many stocks here. All right, so now we just got to get prepared for next week. If you guys want to get involved with some of that pre-earnings run-up plays, Meta cooled off, so we could just take a look at Meta, see if that's a potential for some pre-earnings run-up. Meta probably some good little red candles down to the downside. We sitting right here at 575, right? So sitting right here at support, right here at the bottom, right here at support multiple times. 1, 2, 3. So support held up right here at 576, 575. So we can just actually bring that down a little bit to 575. And as you can see, nice big support there at that 575. Now here's the trick, guys. If we fall below 575, I know you guys looking for pre-earnings run-ups, but the thing is, you still have to have risk management with your trades, right? So if we fall below 575, you can bet your butt that you can. Let's do 549, 570, all right, 50. Now let's do 99. We'll let the alert trigger us. We can start looking for puts for this stock to come down. Now, the reason why is because we will be cracking 575 for the second time. So as you can see, the stock ended up falling down violently, right? Violently from $600 all the way back down to 575. Where's that bounce play at, right? So you guys already know that 575 is already natural support or natural resistance, right? So for example, $1.25, $1.50, $1.75, $2, $2.25, $2.50, $2.75, $3, right? Those levels will always be, guess what? Natural resistance if you trade below it. So for example, when we was at 553, we break 553. If you guys ask me, hey Chris, what do you think the next target is gonna be? I'm gonna just tell you, we got 560 as a target. We'll skip 560. 570 would not be a target. It would be 575, right? 575 would be the next target. But as good traders, you want to try to get out around 573 because 575 is not promised. If you get 575, it will probably literally come right back down. Because 575 will always be resistance. For example, Bitcoin. If you guys know where Bitcoin run up to, can anybody tell me what price? Yes, yeah, Mark. This being recorded. Can anybody tell me what price that Bitcoin end up running up to? Now, everybody trades Bitcoin. So it's people in China, people in India, here in the United States. Everybody trade Bitcoin. So there's a lot of volatility that's in Bitcoin, right? So there's a lot of people making money and taking profits, making money, taking profits, right? So can anybody tell me what price Bitcoin got up to? Anybody? 73, right? 73. It couldn't even make it to 75 because you know why? People had bought in at 50. People had bought in at 30. And good traders know to get out before 75 because guess what? It will literally, I trust me, guys. Listen, I have been into plays, and I'm only telling you this from experience. I have been into plays where I said, I'm gonna get out at $1, and it literally. You will see on Yahoo Finance that the stock actually went to $1, but then it went all the way back down to 80 cents and 70 cents. You be like, God damn, like, hold on, it went to $1. Why it didn't get filled? Because it was so many people trying to get out of that trade, it didn't have enough buying power to push it over $1, right? So with Bitcoin, it didn't have enough buying power to push it to 75. Right? It didn't have enough people buying in at 73, buying in at 74, buying in at 75, because it was so many sellers there. So that's why, again, right? That's why you always, in my alerts, in my stock alerts, you will always see this. Go to the alerts. Hey guys, if we break and hold above a certain level, right? You will always get that, right? Because the thing is, that's why I tell you guys, remember when I told you, hey, if the S&P 500 breaks above 565, because we used it as resistance, it was strong resistance, hit it once, it hit it twice. I said, hey guys, listen, if we break, then I tell you guys this, I know y'all remember, it was only 2 weeks ago. If we break above 565, we will what? What did I say? What word did I say? If we break above 565, we will what? Do anybody remember? You know what? $50 to the person who remember what I said. What word did I say? If we break above 5 565, we would what? Oh, hold on. My audio off. Sorry. Say it again, CC. I know you said something.
Did you say 572?
No, I said if we break above 565, because that was that resistance level, we would what? Or was it 575?
Was it 572?
Nah.
He said 600.
Nah, I didn't give a number. I said a word. Okay. All right. So nobody gets the 50. Nah. So here's the hint, guys. All right. So who said that? Who said that? Who said that word? There it is, CC. Hey, CC said, CC, you was on the one-on-one. Yeah, so I cash out you $50, right? I said that if we break above that, really, and this is why I train you guys how to get in at the break and hold above, because remember resistance, right? So when I'm looking for plays, I'm looking for resistance, right? So if we break above that certain level, we looking at. Oh, Mark, where you at, buddy? You at a concert? Well, you got down doing it. Oh, I'm sorry. Hey, this is recorded. My bad. All right. Mark, where you at? Usher concert? Or you at Kamala Harris economics? Where are you at, boy? Can y'all see that? I can't even see it. But yeah, I mean, I wish I can get out and do something. But nah, it's all good. But here's the thing. If we break above a certain level, we will fly, right? The reason why I tell you guys, if we break above that S&P 500 resistance level, we will fly. Only reason why is because it was resistance once, it was resistance twice. That means that buyers have to push the sellers out the way. If they get all of those sellers out the way, there's no sellers at 576. Nah, man. It's motivating people to say, oh man, we broke this level. We broke this resistance level. Don't let us hold it. Oh man, I'm all in, right? So that's why with these day trades, hey, if we break this, we will fly, right? Because once we break that resistance level, we go up to the next level. So that's why I'm telling you guys, if you get some skin in the game in Bitcoin, because Bitcoin is literally back at 69,000, trying to get up to 70. We passed 73. We go up to 75. We hit 75. Boom, man, we flying, right? We might even not we might not stay in the 70,000 range, maybe for a day or two, maybe, right? We will be people will be so motivated to push Bitcoin up to 100,000. It will be so motivating. But the thing is, as a professional trader, you would say, you know what? I know they're trying to get it to 100,000. They're just like them trying to get it to $1. Now, with that live trading that we did on Friday, or Thursday, whenever I did the live trading session, right? When I came online, I said, hey guys, if you available, we can live trade, blah blah blah. Remember that stock was the first stock that we traded from that scanner was what? It was 80 cents, right? Where did we take our profits at? Right there below $1. Did it hit $1? Yeah, absolutely. But the thing is, with 1,000 shares, we just made over $150 in 2 minutes, 3 minutes, right? So here's the thing with the S&P, we'll just talk about Meta right here. The stock is moving up. Stock is moving up. Let's see, where did we stop at? Boop. This day right here, this stock, I just want you guys to understand and see this, right? Just understand and see it with yourself and have that conviction when you're doing your trades. This is the daily chart. So this is one candle to the upside, 2 candles to the upside. This is like Bitcoin, right? The stock came all the way up to 573. We couldn't get to that 575 because professional traders and experienced traders and market makers said, man, I don't give a damn about no $2. Let me get out as easy as possible. Let me be selfish with my trading because I'm in right here on a swing trade at 560. This is a momentum trade. I'm in at 560. I don't care if the stock go to 580. I want to go ahead and sell my profit, get out before we even get to some resistance levels. And as you can see, we couldn't get to no resistance level. We came up to 573. All right. So we opened right here at 569 that morning. Stock ran up all the way to 573. And do you guys know where we closed at? You guys know how you get red candles, right? You open right here at the top of the candle. The candle start moving and grooving, going up. But then by the end of the day, how you get a red candle is when you close. The stock went from 573 all the way back down. You got that lower shadow right there, right here at 562. So you end up coming way back down here just to come back up and close at 564. So if you're in a swing trade and you say, man, I'm going to wait for 575, you got creamed. You got cooked, really, right? Especially with options and you doing the same weeks, right? Because you get in, I don't care if you got in right here. Say if you up 200% or even 100% just off this movement and you say, I think it's going to go up to 580, 575, 580. You literally probably with theta just cooking you probably even break even or a little negative, right? Even though you up this day, the next day, you got theta played into that play when the market opened right here. So you might be up 10%, maybe-ish, 20%. Stock ran up, you up 100% by the end of the day. And then with theta cooking you, man, you down 20%. Right? So this is one of the reasons why I tell you guys just to be selfish. Just be selfish traders. Get your money, get out, and guess what we're gonna do? Hit the space bar, we're gonna move on to another stock. It's just that simple, right? We don't gotta overtrade, we don't gotta get back into Meta just because it's gonna go to 600. Nah, we made our money on it. Let's go find another trade that we can execute. Or we can wait for Meta to break above this resistance level and hold it and then get in. That's where this play will come in at. Hey man, hey guys, hey, if Meta look at this play right here. Meta puts, if we break below 579, you can grab those 570 puts, day trade only. We break below because we was at 582 maybe when I put this low there. We go below 580, hit that 579, we should get into puts, right? So right here, Meta. Oh man, I ain't gonna lie to you guys. I don't know if you guys trade Meta weeklies, but you guys already know that Meta weeklies are already a little bit expensive. But the thing is, if you got into it on this day and you didn't take profits going while it was pushing up to 573, I know this is hindsight, but only reason why we're talking about Meta is because they have their earnings, and I did not plan this. Right, I didn't know where Meta chart is. Right, I don't know how it move because I trade Meta, but it's only day trades. But the thing is, I'm just showing you that 575, that 175, that I don't know 975 area. Right, that 75 area. Right, always take your profits before it hits 75, especially on the first run up, because you will have experienced traders taking their profits, right? That's the moral of this whole story. I know I'm a little long-winded. I'm sorry. Sometimes you guys gotta say, "Hey, Chris, wrap it up," right? Because I could go. Right? I just want to try to get you guys to understand that, right? Because I want you guys to be as successful as possible. All right, now with Meta and with any trade, you always want that break and hold. As you can see, the stock came all the way back down to $554. So anybody that was in call option right here is probably sick, right? I'm sick. All right, I'm up 200%. 2 days later, I'm just sick, right? So, but the thing is, when you're trading Meta, this is what you want. You want that break, right? Well, here we go. We hit 575 this time, but look what we did. We opened right here. That's how you get green candles. You open and you close, right? We opened at 564. We closed at 568, but we got all the way as high as 576, and then we came all the way back down. So you had a lot of people still taking profits, right? So all of those people who had their shares right here to get out at 575 because they got in at 550 and they was keeping it for a month, so they got out. And then here's your second attempt, and then it came back down. So with Bitcoin, we already did our second attempt with Bitcoin, right? So Bitcoin went up to 71,000, 72,000. It got up back into the 70s, and then it came all the way back down to 50,000, right? So now, with any trade, we already took out some of those sellers. So we took out sellers here. We took out sellers there that was just sitting in it. So now as we come up, sellers, taking out sellers, come back down, another attempt. Oh man, we hit set 575. We took out all of the sellers. We got up to 576. Now we broke it. We just couldn't hold it, right? We just couldn't hold it. It broke, but we couldn't hold. That's why it's important for the break and hold. Now, depending on what chart you're looking at, right? So we're looking at the daily. So we broke it. Now we just trying to see. We got to keep Meta on our watch list now because we broke it. We cleared out a lot of those sellers that were just sitting there, right? So now if we go break it again, I know I can be up in that stock because we already took out sellers. We took out a majority of the sellers to even see 575 on the ticker, right? So we took out some of the sellers. Now I just need you to break again and hold it, all right? So let's see what happens. We came up, we broke it, but we couldn't hold it. We sold off again. We came up to it. We opened right here at 575, a little bullish, all right, but we couldn't hold it. End up closing right down here, all right? So now we know that 575 is strong resistance, right? We know this. We see it multiple times, multiple candles. 575, we know it's tough. All right, I'm sorry I'm explaining support and resistance. Resistance levels, but this is tied in together of that natural resistance, aka once you break above it, natural support. So here we go. We broke above it, closed above it, and now it's not. We didn't hold it. The next day we stayed around it, came all the way back down to 569. Now the next day we broke, closed above it, held it. Let's see, we hold. Boom. Start taking off to the upside with volatility, right? These are big, massive, large candles because the thing is, like I said, you break 575, we fly. With Bitcoin, we break 575 with Bitcoin, we will fly. All right? Everybody trades Meta. There's a lot of buyers. There's a lot of sellers. There's a lot of put sellers. There's a lot of short sellers. There's a lot of long calls. There's a lot of long-term, right? Long-term traders. There's a lot of everybody likes Meta. All right? So everybody likes Bitcoin. Guess what else? Everybody likes the SPY. So when you establish resistance and you break above it, you fly. Okay? Long story short. All right. Damn, my bad. Let me get some drink. All right, before I move on, do everybody understand that logic of that 575, the break and hold of resistance levels? All right, the reason why I give y'all those alerts. Thumbs up. Yep. Nope.
Yeah.
Okay. Fantastic. Okay, so we'll move right along. All right. So now let's get ready. So we can. Damn. I don't got my Thinkorswim open. I can open up my Thinkorswim. I do want to start playing since we get into them big boys, them big dollars, them high movers. Hey man, listen. Oh, you know what? Let me see. Who traded Netflix? Who got into Netflix? And oh snap, KP. It was KP. So one of the things that I did with KP. I think we was on the last week call. He said, hey, you know what? I really wanted to trade it. I got in at a certain point. You know, it was doing that live trading last week. And what happened was I said, you know what? We're gonna get into Netflix, and I just want to see if you would have been profitable if you would have played those Netflix call options, right? Because Netflix was a little expensive, but the thing is, he said that hey, I was gonna buy on Tuesday. The Netflix was around $700, $708. I just wanted to see. Okay, cool. You know, so we actually got into it on demand. With a 750 strike price and a 800 strike price for next week. Well, for the next week, for actually this current week expiration date. And you know, he's not on here, but you know, since this call is recorded, I do want to show you guys what those profits would have been just by grabbing those contracts. And the thing is, with those Netflix contracts, Netflix, the bank stocks really kicked off earnings, but Netflix was one of the biggest, one of the part of the big seven, right? So that reported earnings. So and they blew it out of the water, man. Listen, they blew it out of the water. Now, here's the thing, guys, and I don't know who's in TKO. Yes, it was a little expensive, right? But it takes a little money to make money. Now here's the thing. We are already up in TKO. So we did get January. We got January call options, right? Who got in TKO with me? I know I alerted it. Hold on, let me log in. Somebody can answer that while I log in. Anybody getting into TKO? Damn. Or want to get into TKO? How about that? Damn it. Anybody? No? I know somebody else got into TKO because I talked to them about it. Y'all just being shy. Anybody? Yes? Somebody just say no. How about that? Anybody?
No.
Dang, so I know I'm not the only one, but I'm the only one on this call that got into TKO. That's messed up, man. Y'all just got me trading by myself, and every time y'all come up and say I'm in this trade, I was like, I'm in this trade with you guys. Oh man, y'all just played me. I feel played. I'm just kidding. I'm just buying some time to log in. Now, all right, so here's a little sentiment, right? So this is basically, I'm not gonna say it's like macroeconomics, but the thing is, what I do want to what the hell? All right, Mark, you trying to flex? Hold on, let me just take a pause for the calls and see what Mark. Mark, you at Usher concert? Oh, you at the circus? What the hell is this? Well, anyways, I'm excited when y'all take trips and do stuff. I don't really do too much, so I get excited when y'all do that. All right, what am I thinking? Okay, so TKO, right? So we were just talking about Netflix. Only reason why we're talking about Netflix is because On Demand. Let's go to On Demand. Because KP wanted me to do this, and I just wanted to show you guys on this call, like plan. Oh, it's not. Where's my trades? All right, so I gotta redo it, right? So let's redo it, and it is gonna be really quick. So basically, Netflix had their earnings. He basically said that he wanted to get in Tuesday. Oh, Netflix had their earnings. Was it the 8th or the 15th? All right, it must have been the 15th. So we'll go for the 15th. It was around $700. Let's see. NV. All right, so here's one thing, guys. If you don't have Thinkorswim, I do recommend it. One of the reasons why, because you can get free CNBC, right? So free CNBC, and it's a great platform for you to go practice trading, especially with your option trading. I don't think no other platforms would do that. If you want to go back and hindsight some trades and practice some trades, use your Thinkorswim, right? And you get free access for CNBC, right? Now, basically, we just say we got into Netflix. Let's just say this: Netflix reported their earnings that Thursday. All right, so we're just gonna grab some shares. We're just gonna it's at 709, so we're gonna grab some 750s. Remember how I told you guys, I'm trying to stay away from it because they was expensive, right? So Netflix was expensive to buy. So you're talking about spending $1,200 just for one contract, right? For a 750. Now, one like last earnings, Netflix didn't move that much. I think they actually missed earnings, right? Or had bad guidance. It was something like that to that nature, and Netflix didn't move, so it literally cooked a lot of people, right? So now spending $1,200, right? Let's just buy one contract because you don't want to break the break on earnings. If you can gamble on earnings like that, cool beans. But I don't like to. So as you can see, one contract. October 15th, going into Netflix earnings, $1,200, and I'm gonna try to be short, because I know you guys it's late. All right, so here's that one, and we're gonna buy another one. Spend $300 and some change. We're gonna buy one contract for 300 and some change. 335. Let's go. Boom. 335. Let's take it. Right. So now we are literally in 2 contracts of Netflix. Right, on October 15th, which is Tuesday. Now going into their earnings. Let's just fast forward it. Hold on. When was they earning? Somebody tell me. Friday. Was it Thursday or Friday? I'm sorry. Damn. Thursday or Friday. Fuck. So I wasn't ready for this. Netflix earnings was. I need some class participation from y'all now. Netflix earnings was Thursday night. So Friday morning, right? So Friday morning, we'll just take it. We'll just come here Friday morning. Let's see if we was profitable in any of those trades. You know what? Before that, let's get a little real cheat one. Like, cause I know you guys like getting them real cheat ones. Let's probably get this one right here. This 851, right? So we'll just get how much of these? We'll just get one. No, we get one. 850 contract. So we're in 3 contracts. 750, 800 calls, 850. Now, I want to show you guys the theta in these plays, right? So we're just gonna go to Thursday. See, so you got it. You going in Tuesday, Thursday. How do we do on Thursday? I know the market tanked on Thursday. So let's see. Boom, 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 boom. Hurry up. How y'all doing tonight while we wait for this to load? Y'all doing all right? I hope y'all doing all right tonight. Fantastic. Don't worry, we're gonna go over some plays. I got some gold plays on this. All right. Ooh, shit. All right, so all 3 of our trades. In all 3 of our trades, we are actually down, right? As y'all can see at the bottom of the screen, that $1,200 trade win, we down $375 earlier in the morning on Thursday. $116 on that $800 call we paid $300 for, and then for that $100 call option that $65 call option we bought, we're down $29 going into earnings later that afternoon. So the stock price is currently at $693. I know some of you experienced trader and y'all big ballers, y'all probably would have averaged down a little bit, probably on that 850 call option, but we're just gonna leave everything how it is, and we're gonna go into Friday morning when the market boom. Not the market, when Netflix boom. Again, this platform right here is called Thinkorswim. It's a part of Charles Schwab. Now, the stock price is at $750. So we're actually in the money with that 750 call option with the same day expiration. So we're just gonna wait for that to load up and see how much we're up or down. All right. So this is the power of theta. The power of theta. And as you can see, we are literally, we're at 753. We are literally still down $200, and we're in the money. So I'm gonna pause it right there. That's why this is one of the reasons why I always tell you guys to, like, if you're gonna trade earnings, one of the things you do is do what? You always get next week's. All right, because you don't want theta to kill you. I know me and CC, I know me and you was talking before, and I know you guys and I know Mark has been doing that. And on that call, he was like, Chris, I don't know why I'm still losing. And I said, hey, because we got into Apple, and I said, hey guys, we're gonna get next week's Apple trade. Hey Chris, I don't know what I'm losing. I got in when you got in, or I got in at a better place than you got in. Why am I losing? Because we traded sideways. All right, you got next week? No, I ain't getting next week. I got 0 days. Okay, so that means theta is literally cooking you every single minute, right? Your theta is cooking you every single minute, all right, because it expires today, right? So that's why you always want to get some time on your option trades. So, for example, the TKO trade we going into earnings. But the thing is, like I told you guys, so hold on. One of the reasons why I told you guys about TKO. It's like I told you, I have a good mentor that's a vice president at WWE. He said they've been doing phenomenal, right? That's all you got to tell me, right? You don't even have to give me that much more inside information, right? Phenomenal, right? Number two, guess who got to deal with Netflix starting January? WWE, right? WWE, one of the reasons why TKO is going up is because of that Netflix deal. Starting January, WWE will be going live Monday Night Raw on Netflix. Now, while I was at the WWE, one of the incentives that they always brag about is when I don't know if you guys watched wrestling before. WWE was on the USA Network. The WWE did not miss a Monday, ever. Memorial Day, we still went on air. I don't care if it was Black. I don't know what kind of holiday. It can be World War III going on. If it's Monday, WWE still going on air, right? You guys seen it. People have died that Sunday night, and guess what? We still went on air. We just did a tribute to them, right? So, one of the things that they stand firm of, hey, we're gonna be on air. We want this title. And here's the thing with Netflix. We're live on Netflix because Netflix is starting their live streaming services. One of the reasons why Netflix I don't know if y'all heard the earnings. I do recommend you guys, if you guys are long-term investors, start listening to earning calls or going into their investors page, looking at their PowerPoints and see who they're doing business with. All right. So that being said, that's why I positioned us into TKO short term, and yes, we are up already on TKO. Unfortunately, I ain't gonna say unfortunately, but it's hard for me to tell you guys to get in at these prices because we already got a little nice pop, and our strike price was 130, right? So the stock ended up coming down to the levels that we wanted. This is what we talked about. This is what we said. It hit it really flush. I mean, shit, we just got to pull the trigger, right? So if you're not in, just hit the space bar or wait for a red candle or something like that. All right. Sorry for being long-winded on that part of it. But pre-earning plays, like I said, we got Apple, Microsoft, Google, Meta, Eli Lilly. Shouts out to CC for getting me into those trades. Oil, which is ExxonMobil. We got Visa, MasterCard reporting to other. I don't think American Express is reporting, but the thing is, a lot of people. One of the news cycles that came out last week or this month was, hey, you know what? Hold on, let me just show you. I just want you guys to see. All right, maps that shows. This is a map that shows credit card debt. So the thing is, hold on, you better show me a map too, instead of all this advertisement. Ooh, shit. All right, with the worst credit card debt. I don't know if you guys live in these states, but hey, these are the 5 states that has the worst credit card debt. All right. So the thing is, credit card levels hit into the trillions. That's the report that I got from this week. Actually, credit card debt has hit the $1 trillion mark. All right, yeah, we do got a lot of plays that we can look to either do pre-earnings run-ups or not even do the pre-earnings run-up or even just the 2 standard deviations off not nice pops, right? So like I said, if we are getting nice, good sentiment with this in the market, like good news with Microsoft, good news with Apple, right? Good news with Meta, good news with Eli Lilly, right? Good news with oil and gas, right? So what's this gonna play? That's gonna give us some good economic GDP numbers, right? So all of these numbers right here, when they report, that's gonna give us some good consumer spending consumer spending economic data, right? Something for us to analyze when those numbers come out. We can be already bullish or bearish, all right? So going into those numbers, just by us actually analyzing what happened during earnings this past quarter, we can actually say these GDP numbers we can expect X, Y, and Z, something good or bad. Just the same way that we doing it with Netflix, the same way that we can do with any company, right? If we know a company has been booming for the like for example, the airline companies, we all knew that the airlines companies was gonna go up after the summer because everybody flies, right? So if we don't care if airlines was going down in May, right? Who cares? I don't care. Because in September, I know that everybody has to travel during the summer months, and guess what we did? We killed Delta. I think March still in Delta, up 300 and some percent, right? I took my 170% and pieced out, right? But the thing is, this is something that we knew, right? Just by just doing some type of analysis on the market. All right. Any questions before I move on? I'll give you guys about 10 seconds. Any questions, comments, concerns, questions about anything? Payment inspired, balance return. This boy. Any questions? Comments? Concerns? All right, so no questions. So let's get into some stuff that that we need to stay on the lookout for. And one of the things that I do want to stay on the lookout for, and you just saw some breaking news, and that's how I run it, because one of the things that you saw the breaking news, but one of the things that we have already said to ourselves was that, hey, listen, the Chinese plays, right? You know, I don't care what you do. If you stimulate the economy like that, once you stop stimulating, what you're gonna do? You're gonna start falling, right? So as you can see, we end up finding some tops with not just Pinduoduo. We can just type in all of the Chinese stocks. All of the Chinese stocks will have the same pattern because they had the same pattern up, right? With those big gap ups. So you guys remember? Do you guys remember when I told you guys to start shorting the Chinese stocks? Do you guys remember that? Anybody?
Yes.
Exactly, right? I said start shorting these Chinese stocks. And I gave you one that I got into. I alerted everybody. We made over 100% easy. That was an easy play, right? Because what goes up must come down. Look at the RSI. Every Chinese stock, y'all remember we went to FinViz. I'm talking about damn near PDD, BA, all of it was high 80s into the 90s, right? So as you can see, we looking at the daily chart. I can literally put a downtrend. Look what Lil Mama doing. Instead of me having to draw this yellow line, Lil Mama does all the work for us. She's giving us that indicator. Hey guys, listen. Hey man, listen. Chinese stocks, man. Hey Big Daddy, Chinese stocks going down. Right, you look at my line, look at my yellow line, and look at Lil Mama. The top of this chart, we come down. Where do we usually consolidate? Come down to support levels. Here's the first support level. We break that support. We already broke it right here. We go down, right, even more. So this was support. We gapped up, gapped down. Got to gap the field to the downside, right to 97. I think we can bounce off 94. But in the meantime, in between time, Chinese stocks will continue to go down. Right, continue the downtrend. Even though they end up trying to post that news, y'all saw it earlier. It's not even there no more. Breaking news, right? 25 basis points. All right, so that's with all Chinese. Like I said, I could type in any Chinese company. So one of the things is that look, we already came down, right? Trying to bounce off Big Daddy and went back up. So all Chinese plays. I don't care what it is. We are still in the bearish sentiment of Chinese plays. Still a little bit. It's still a little bit of juice to squeeze off these plays, right? You can't fool us. That's one thing you can't do. You can't fool us, right? All right. Now that being said, if Chinese plays going down, right, and they have to stimulate their economy with stimulus. Think about what y'all just learned today about GDP, right? We can go look at what the GDP numbers for China. What is really going on over there, right? So I'm pretty sure it will be negative, right? They'll have negative numbers. So the thing is, they have to do stimulus, because their GDP is low, right? That's why the stimulus came in. That's why the government did all of that stimulus on this one. Now, that being said, I don't want to talk about the S&P 500 right now, but what I want to start doing is going into some of these plays, right, like this, gold, right? All time new highs on gold, gold trust, all of your gold plays. You can start even looking at gold mining companies, right? Oh snap, we had 69,000 on Bitcoin. Here we go, right? Here we go. All right, so like I said, gold. We can still continue to ride that wave up to the upside on some of those gold plays, even though we're just crossing like GLD, right? Just crossing to that overbought territory. But one of the things is that it's a lot of fear in the market. We just had Israel just go. I think they just bombed people. 89 people, 87 people just got killed from the Gaza Strait, right? So ain't nothing stopped, right? We're gonna keep going. So gold, I think gold. Hold on, I don't think. I know gold will continue to go. So if you want to grab some shares, if you just want to grab you some call options, sit back, kick your feet up, and just let it go, then go. But as you can see, Bitcoin is still moving to the upside. So people like to get out of stocks and into gold and Bitcoin, like different types of assets. Now, one of the things that a trader just told me is that you can go to Costco and buy gold. I didn't even know that. You can literally go to Costco and buy gold, like real gold. All right. Then who told me that? CC, one of the CCs. Isn't that true, guy? CC, is that true? You can go to Costco and buy gold. You know, I can just Google it.
Yeah, they've been selling them.
Yeah, that's true.
Okay, man. Do y'all own any? I'm just curious. Do anybody own gold? I don't own any gold. I just never thought to buy gold. Other than my gold necklace, my wife, but I didn't buy it. But do y'all own gold bars? How about that? Oh, you gotta be a member. Oh, so these like these little ounce golds. Okay. Oh, 1 ounce gold bar. How much they sell for? 1 ounce. Okay. I mean, I guess it's good. I don't know. I guess it's good. 1 ounce fine gold minute. You know, I might get one.
Warren Buffett don't like gold.
Oh, he doesn't?
No, he says that if you had a choice between buying precious metals or equities, he would always pick equities. Just because every Monday through Friday you got, tens of thousands of people potentially getting up to go to war for you. Whereas all a piece of gold can do is sit there and be a shiny object.
Hey, you know what? That is a good point. Hey, that is a good point. And then you got a board of directors trying to make the stock price go up, whether it's fake news or, you paying Wall Street Journal to put out a good press for you. Yeah, I like that. Hey, I like that.
Yeah, you can go over there and be more demanding of your staff and your leadership to do better next quarter, next year, or something. But yeah, that gold is gonna just be worth its weight in gold. That's what it's worth.
That is true. You know what? Hey, man, appreciate that, Ken. Hey, man, hey, listen, that's why Warren Buffett is that guru guy, right? He has years and years of experience, right? So, and that's one of the truest statements. I have not heard that, but hey, man, that's what I'm talking about. God damn, Warren Buffett. Yeah, that it makes sense, right? So, that's one of the reasons why you got the board of directors. That's why people get fired. That's why CEOs get. Hold on. Speaking of CEOs, right? So remember CVS. So just like Ken said, Warren Buffett don't believe in it because look, oh my goodness, look what CVS did. $5.56, right back up to that Big Daddy right there at $60. God dang. That's what I meant. God dang. Oh wow. So we actually talked about this. It literally fell. Man, what day was that? Friday. I think it was doing live trading or something like that. But man, I know I didn't try to. I know somebody brought it up, and I did not get you. I did not deter you out of it. I tried to keep you in it because I said, remember? Oh yeah, it was live trading because I said, remember, news just came out 1 hour ago that that they so what happened was they earnings report got leaked or quote unquote leaked. Oh no, they released their earnings report early. Then an hour later, they announced a new CEO in the stock market. The CVS ended up rallying back. So bit dropped to the downside from the earnings release, came all the way down to 556 or 557, right back up to $60 because they end up installing that new CEO. So it was already pre-planned. So that's that manipulation that you was talking about, Ken, like Warren Buffett, right? Hey man, listen, hey, that gold, yes, it's gonna go up because of war and stuff like that. But you know, I got people who actually making moves on my behalf, right? If I own a company, so. Fantastic analogy, fantastic. Thank you for sharing that with us, because you know I'm gonna start using that. Cause that fuck that gold. I don't want no more gold. I want equities. I might just get one gold bar just to have it. But anyways, all right. So what I do want you guys start looking at is just some gold options, some gold option plays. Another company was what was it? Now this is a penny stock, but we are moving to the upside. All right. So again, this is a penny stock, and you guys know that I don't really trade penny stocks. I thought Joe would be on, but I did want to bring it to his attention that it is a couple of penny stocks are moving, and you guys know how it's penny stock season, right? We literally saw a stock go from $2 to $30 or $70. It was one of those stocks, right? So it went from $2 to $20, right? $2 to $70. It was one of those stocks. We went over it on Friday, but like I told you, we're in that season where it can be life changing or account changing. So it depends on how many shares you get into it with, if you trade it, if you grab options on it. So I do want you guys to be aware of your gold stocks, right? So we're just gonna go look at some of those gold plays, and another one is NEM. Nice big movement to the upside, as you can see. Nice big bounce off Big Daddy. I still think we got room to the upside on this company. As you can see, we can zoom out on it. Nice big uptrend on it. Just been a solid. It can be a solid little option play with some time on it, but that's another part of that industry. Damn, what's another one? Oh, the miners, GDX. All right, as you can see, GDX, same thing, nice uptrend. And this is part of that. This is if you don't want to buy GLD, you can get into some of the mining companies. The same way that I tell you guys that you can get into Bitcoin. If you don't want to get into Bitcoin, you can get into some of the ETFs, which are bullish right now, or the mining companies, which are bullish. So, for example, as you can see, gold is running up the same way that Bitcoin is running up currently right now. We actually hit 9.5, right? 69.5. So the thing is, Bitcoin is moving up the same way as gold moving up. So one of the things that you can do is, if you don't want to play Bitcoin, you can get into the mining companies. And as you can see, we got a nice bit uptrend right from $3.75 up to almost 100% return right here. Lil Mama crossing Big Daddy. Do I think we got room for the Bitcoin mining companies to fly? Absolutely. As you can see, we're working our way up on just TeraWolf, right? We haven't even went through all of them. Oh, any, we back over $1 on any. So I don't know if you guys got into any, but any got as low as 66 cents just last month, right? Already, if you was bullish on Bitcoin, and like I told you guys, I mean, get some exposure to some of the Bitcoin plays, whether it's the mining companies or the ETFs. Everybody have this watch list. I share it. It's already in the Welcome to Selfish Trader. It's always there for you to get it, re-upload it, upload it, whatever you want to do. You have a crypto mining section. So when I say, hey guys, let's move into either the mining companies or the ETFs, if you don't want to get Bitcoin, that's what you should be looking at. Just coming over here and hitting the space bar, analyzing it, see what you can afford, what you can't, get you some options, get you some shares, whatever the case is. If I'm bullish on something, I'm not gonna 8 out of 10 times it usually go back up to the upside. So because the only reason why is because we talk about it, we got some type of analysis, we come up with a hypothesis on why it's moving up. We just don't say, or I just don't say it, or as a community, we just don't say, oh yeah, it's just gonna go up. Oh, what do you mean it's just gonna go up? Why is it just gonna go up? Yeah, because I just believe it's gonna go up. Yeah, we don't work like that. Like it's always some type of reason or some type of hypothesis. So now Bitcoin, there's a reason, there's a hypothesis behind it. What you want to do is you want to get into one of those sympathies, and as you can see, any Hive, Hut hitting that $15 strike price. I don't know if you guys hit it, but here's that next target. As you can see, we're coming up to it. So if you're already in it, congrats. But your Bitcoin mining companies are what you should already be in, or if not, try to position yourself into those plays. Now, I can say wait till we have some type of pullback, but the thing is, Bitcoin is about to get ready to break over 70,000. So what we're looking for is Bitcoin to hit that 73 or retest 73. Hit and try to work his way up to 75. See if we get a break from there. Now you can play momentum swing trades, and I will be alerting them those this week. But the thing is, being nice and low in certain trades, that's where you want to be. So Bitcoin, gold, prepare for a upswing in those. Now, whoo. Going into the next week, we got earnings. Like I said, we got earnings that can move the market to the upside or to the downside. Now, S&P 500, we're right here trading above that 585. And as you can see, we got stuck here, 585, not once, not twice, not 3 times, but 4 times, right? So we actually closed right here. What type of pattern that is? You got your little uptrend, higher lows are forming. You got your top level of resistance. What kind of pattern that is? Higher lows forming, top level of resistance. Do anybody know what pattern that is? If not, then I can just tell you.
Flag pattern.
Yep, that is a flag pattern. And in particularly, an ascending triangle pattern, right? So I do want a little bit more candles, right? But the thing is, we are getting those higher lows. We have top level resistance. We got a nice little uptrend right here. So that is a nice little ascending triangle pattern, right? Come up, hit that top, come back down, hit that trend line. Come up, hit that top, come back down, hit that trend line. And what we do, like with ascending triangles or flag patterns, it's just like you stretching a rubber band, right? Imagine you guys having a rubber band in your hand, one of them big, fat, thick ones, right? Stretch that thing as far as you can and see if it pops, right? Like I tell you guys, majority of the time, it popped to the upside. That's why I love trading these patterns. This is one of my favorite patterns because majority of the times, I will get it at that trend line, right? The same thing for... hold on, let me just show you. You remind me of a girl. Let's see. Goddamn. I'm just trying to open up another chart here. And just another love TKO. Boom, 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 boom. Boom. Think I got it. All right, so it's the same type of same type of pattern, right? So right here, if we were just looking at it right here, we start forming. We hit the top, start forming higher lows. Put that thing on the trend line. Straight up, straight up like Janet Jackson. Straight up now, tell me, do you want to love me? All right, start forming some tops. Boom. Higher lows start to form. Higher lows start to form. Come down to that trend line. Just like that rubber band y'all got in that hand and pop. Boop. To the upside. Right? That's one of the reasons why I love playing ascending triangle or flag patterns, right? It's in my book, Selfish Trader. I'm just kidding. Y'all know I'm gonna be promoting. But all right, now S&P 500. What do I think about S&P 500? The thing is, with these earnings will say it all, right? So we either drop because it's part of the S&P 500, or we pop to the upside. Now, all eyes will be on Tesla, unfortunately, right? Tesla will move the market. So I am bullish on Tesla. I do think that snap. I do think with the Chinese adding that stimulus, I do think we probably get a little pop. And with the German facilities and with the Mexico, I hope that, it's a hope, right? 50-50. I don't know what it's going to do. I'm not going to be in no type of trade other than the long-term positions that I do have. Unless the 2 standard deviation is appealing. Nice and cheap for me. Try to keep it under $100. If it is and it look good, then I alert everybody that week, and then I say, hey guys, let's try the 2 standard deviation play, and let's try to go for it. All right. Now I do see Coinbase right here at 220 over here on my right hand side. The thing is, I don't know if you guys are in it, but BitLarko was in it. But he took his profits already. Nice gains off of it. But Coinbase, along with Bitcoin, are bullish plays that you can actually be in. All right, so the S&P 500 game plan. I won't know until tomorrow morning. Once we get those first little earnings out the way. All right, first little earnings out the way, and then we'll go into Tuesday. But the thing is, the game plan on the S&P 500 is this: if we start to break down below our trend line, so we already got Lil Mama already working her way up, like right here. We're overextended from it, right? So we like that as long as you continue to go up, but we are a little overextended. So one thing that does happen, once you get a little overextended, then you have to cool off a little bit, right? Which is fine. Right here, we got overextended, cooled off. Right here, we got a little overextended, cooled off, which is fine. Right here, we are a little overextended, but here's the thing. We was overextended a long time for here. Was overextended a long time right here. We're just now starting to overextend it right here. We at top level of resistance. We already had our trend line. We already got our trend line set. So here's our trend line. One of the things is this. If we break below 580, all right, if we break below 580, we are literally flushing, right? So here's that 579. So if we break below Lil Mama, you should be into puts, okay? If we break below Lil Mama, we should be into puts, all right? Now, I'm not saying swing your puts. I'm saying get into your puts as soon as that alert go off. When your alert go off, grab your put options, maybe the 577s, let it come down to 577. You take your profits, you move on, all right? Now, if we start breaking 577 and go down to 5, and we start working our way down, and it's economic data or it's some type of negative news in the market, you can stay in it then. But usually, if you get into 577, if you get in at 579, it go down to 577, you're up 100%. Right? So you're not getting the 0 days, you're getting the next days. You want to give yourself some time, or even 2 days out. The thing is, you don't want to get into trades where you know that theta plays a part in it, unless there's some type of news that's out that's causing the market to go down. And that's what we all on this call are getting ready for. Right? But we are getting ready for when that news come out, or when we start, when the market start flushing. Yes, we can start getting into 0 days. I still recommend the next days because you can literally look at your portfolio and you can be up 200%, and you can literally make that decision and say, yeah, I'm gonna swing it. We still negative, right? So that's what I do like. Yes, you can make a lot with 0 days, but the thing is, you want to be as safe as possible. You don't want theta to cook you for no reason, right? You want to, hey, I'm going to get into this. Oh, I'm okay with theta cooking me because I'm in it for a certain amount of the time. I'm in it until it hit my target. That's what you got to start saying to it. Hey, by 1 o'clock p.m., if it hasn't hit my target, I just got to cut out of that play, right? Because by the time 1:30, 2 o'clock hit, that theta start kicking up even faster, right? So that's when you train your 0 days. All right. Any question? I'm sorry I went over the 10 o'clock area. S&P 500, you got your game plan on that one. You got your game plan on your Bitcoin mining companies, your Bitcoin ETFs. We went over dividends earlier. I do like the dividend, the YieldMax plays. So you can type in YieldMax, Mr. YieldMax ETFs. This is the company right here. You can just take a look at some of those. I think Jonas, I think you posted it in the dividend chat room actually. You can just, here's the link right here. As you can see, distribution rate, this is 123% per year, man. Like, what the hell, right? That is a lot, right? If this don't motivate you to get into TSLY, right? Like, seeing that 123% distribution rate, fantastic. They got Apple, they got Nvidia, they got Amazon, they got Facebook. You see all of the companies that they have, right? They got Facebook right here, or Meta. They got Google. They got CONY. That's what we in. They got Disney. They got Netflix. I forgot they had Netflix. They got ExxonMobil, who got their earnings coming out. JP Morgan, they have a lot of companies, guys. PayPal, Square. I know you guys talked about Square. So all of these companies pay a good dividend rate, distribution rate. As you can see, PayPal pay 79%. Square pays 79%. Moderna 68%. So I want you guys to come here, look at some of this. Oh, MSRT. We're gonna here's MSRT. I am bullish on MSRT, but the thing is, they do pay out a dividend. Oh, Ybit. I didn't know they had Ybit. Okay, and they got an inverse Tesla. Okay, so if you bearish on Tesla, you can grab this one, right? So they got a lot of stuff. Come take a look at it. They, like I said, they do pay dividends every single month. So just take a look at those. And you know what? I just posted again in the chat room, Jonas. Sorry. Just so people can. All right. So do you guys have any questions, comments, or concerns, thoughts that you want to go over? And I stopped the video here.